Good morning, traders. It's Wednesday, the 23rd of March, 2016. It's 8:01 a.m. Chicago time. Thanks for joining me. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight sentiment overall looks mixed. The market stance is pretty mixed up. Oil and gold are down. The treasuries, the treasury futures universe is mostly flat. The Asian markets, the Nikkei is down slightly, Hang Seng down slightly, and the Shanghai is up. The Japanese yen futures are down slightly. In Europe, the indices are all up, with the DAX leading, up 106.5 points. DAX is trading 10,111, and U.S. equities are flat, and the dollar is slightly up again. The overnight sentiment is fairly mixed. We could see that there wasn't much range or volume in the Asian and European sessions. Key news item that's coming across is that 4 of the 17 members of the FOMC have publicly indicated their disagreement with the dovish guidance in last week's policy statement. So I'm going to pay particular attention to what these Fed speakers come out and say. This may cause some extra volatility and an elevated level of uncertainty in the market, which again always results in more opportunity for us day traders. The other big thing is that the leading polls, or a poll out of England, with the ICM, shows that 43% of Brits are in favor of a British exit from the European Union, while just 41% oppose. So those who want the British to exit the European Union are now leading. So that's another piece of uncertainty that's on deck. So those are the things that are really leading right now. As far as what we should expect today. Today we're looking for the new home sales number, looking for 510,000 new home sales at 9 o'clock Central, 10 Eastern. Gasoline and crude oil inventories at 9:30 Central, 10:30 Eastern. Crude oil inventories expected at 2.45. 2.45, prior is 1.3. Distillate inventory is expecting negative 1 million, and gasoline inventory is expecting negative 2 million. You probably have noticed the price of gas at the pump is increasing a fair amount, actually, here in Chicago. As far as other items that are on deck, Fed's Bullard is currently speaking on Bloomberg TV and radio, so look out for comments there. Let's switch gears here and look at where we are. Just 1 second. So yesterday, sorry, I'm having a bit of a technical issue here. So here we go. All right. So yesterday, in looking at what we expected, let's push forward here. So again, yesterday, a replay of the prior day's idea, and that is that the market is likely to attempt to push higher, and then rotate down to 2026. That has not happened yet. It seems like buyers are definitely still in the game, and continuing to put pressure on the buy side. So yesterday we're looking for a push to 35, 36, potential chop in there in this high volume node that was left behind from Monday. and then expected a failure and a rotation down. We opened below the market. We were expecting to open below the market, below the prior day's range, and that's the reason for that hypothesis. That's the primary hypothesis. The secondary hypothesis is what happened again. Have you noticed that the last week and this week, last week I think 4 out of 5 days played hypo 2. So far this week, hypo 2 has played out twice in 2 days. Yesterday, looking for it to open, chop around, potential test of the overnight low, and then looking for it to go back into the range and push higher, um, back into the 2042 area, and back into balance. And that's basically what happened. When we close this, you'll see that essentially what we got is just that. Is it never actually tested the overnight low, but overall a fairly choppy open auction out of range, just outside the range. We did close the naked point of control we left behind from Thursday on that rally day. That got closed, and then we pushed back into the range. The last line of defense for the sellers was value low. It did break lower off of value low, and it ended up pushing through, and it attained its point of control. Not only that, but the pullbacks were fairly shallow. We didn't get any real tests of the mid until later in the day. The pullbacks just kept stopping short of going all the way down to the expected level, and then we finally push outside. So again, just like the day before, notice that this day here, the range is outside of the prior day, and then yesterday, the range is outside of the prior day again. So overall, this looks like a megaphone type of formation, right? So there's a two-way battle going on here. Higher time frames in play, intermediate to high, and overall the market's having a hard time finding the sellers to stop the shift up. Yesterday's profile had two clear distributions, but overall we shifted the point of control down. Much of the trade, much of the volume that went off imbalance. So what we have is 3 days of balance here. This could be a nice setup for a quick move out of here. The trend is up, but when we look at this on a composite, so we've had 3 days of balance. So we put a composite on there, and look at how healthy looking this composite is. It sounds like I'm talking about a pet, but it just looks great. The distribution on this shows that there's a heavy amount of trading going on in the 20, 40, 50 area, and there is a fair amount of balance in the middle here, which is exactly where we're opening. It looks like we're trading at 39.50, and we're in the middle of this 3-day balance. The break out of here could be quite substantial. The next area up is 2052, which comes to us from December 30th. It's the top of a thin zone. Let me show that here for a second so you know where that's coming from. So let's go back to December. So here's the gap close that we just took out, and here's the LVN zone all the way up to 2052. This is the area that I'm looking that actually I was looking for yesterday. I was looking for resistance in this 52 area up here for a potential short on the first test. Didn't quite get there, but that's where we are now. Again, we're trading in this 2040 area. Lots of volume down here. Let's go forward in time here. Lots of volume down here, and that's where we are. So as much as you want to look for breakouts, really the actual context is balance here, and has been for the last 3 days. So I want to make that clear so you're not kind of diving in with your head first, looking for the big breakouts like we've had here. Um, we've had some nice moves on the upside for those who are holding long. However, you may have noticed that if you're a day trader, you may have noticed that the opportunities are not as clear as they normally would be, or as they were in January, February. And this is generally normal on an uptrending day, on a rally type day. OTF is operating subtly but very clearly in the market, and it creates some mixed signals that we tend to look to fade, and then we watch ourselves get run over. But overall, just remember the context here is that we are in this high volume node that we have formed over the last couple of days, and therefore the higher probability trades are likely to be outside in or balanced or mean reversion type of setups, and that's really what I'm hunting for. So that's how things are shaping up overall. We're pushing the overnight low right now. If we look at the overnight session, we see that the activity on it until just now has been pretty poor. The overnight session has been very, very quiet. I don't like this white color here. I'm going to kill it and go gray. Um, you can see that we're breaking lower here on a failed higher high. The market's breaking lower and pushing lows down to 36 and a quarter, and we are back in that 36 that was there the night before. So if we look at the night before's profile, we had pushed right into this. This area was key coming into yesterday. Didn't hold up at all. We did have some noise coming into it yesterday, but it didn't give us any significance. And here we are, right on top of this area again. I expect that this is likely to stabilize. This looks like news to me. The type of move we have here, strong delta. This changes things a slight bit. The primary hypo now looks like, since we are in balance here, the primary hypo is we're likely to test to continue pushing on the open down through this 2036, and then I'm looking for it to return back into balance at 2040, and that would be the primary hypo. So for the last 3 days, the primary hypo has been push up and rotate down. Today, it's the other way. Let's see if it's still opposite day when it comes to these hypos. But I'm following the normal conventions or the normal pattern of what happens in a normal auction, and I have to keep doing that until the market proves that that's not the case, which is what we have hypo 2 for. Hypo 2, we open up, push higher, and start moving back just the way we have been across the range, and then I would look for it to test 2045, this LVN on the other side. If the market breaks, so hypo 2, open, push higher to the other side, that's hypo 2. Hypo 3 would become the attempt to push higher, failure, and then the push down. And again, 2026. I know I'm sounding like a broken record, but it's just the way it is right now. That would be hypo 3. I would love for this. I would love nothing more than this hypo to play out, because I believe that that's where we're likely to get the best indication and the best opportunities if the market rotates down. That's what's going to give us the bigger moves and at the fastest pace, in my opinion. So that's how things are shaping up right now. I'll keep this short and sweet. Again, as always, hope you're getting something out of this. Good luck today, and I'll catch you tomorrow. Thanks.